let's do it. Welcome to the Homes and Homies podcast, where real estate meets friendship. I'm Ernest.
And I'm John.
I'm Mike.
And I'm Drew.
Our special guest today, we got Drew on board for his first ever episode. We're going to break him in a little bit here.
I welcome it.
I didn't like the way that sounded.
Be
gentle, please.
Oh, I don't know.
My safe word is kumquat.
No, that's the European trip. I forget the safe word, but it was something
Yeah,
long.
it was something, yeah.
And he was like, I can't say that.
Tippy toe.
Well, if we would have caught it, Drew almost went for the jelly beans on the table, but Mike stopped him there a little.
I shouldn't have done that. I should have just chowed down. And
That's my candy of choice, too. So I was like, oh, wow, there's a whole bag. And then,
Oh,
I'm
man.
glad I didn't get a stink bug or a turd burglar or whatever else is
Spoiled
in there.
milk.
Right?
Spoiled milk.
They really aren't good.
There's supposed to be a skunk in there, too, I think, is what there is.
Yeah, I got some of those from the Harry Potter world or whatever. I never ate them. I don't know where they are, but...
Well, if you're wanting to find this, you can find it at your local Kohl's, and we'll dive into the jelly beans here in a moment. But some real estate stuff we have going on. Mike, you brought some topics you want to talk a little bit about today.
Well, my favorite guy, Jerome Powell, once again is flapping his gums on.
First time ever said by anyone ever.
Ever live on a podcast.
He's just so dang handsome.
They've been jacking up rates for months, and then they go, we're surprised there's going to be some bank failures because of this. And they're kind of, he says he's surprised by that. I mean, so the commercial world is taken on the chin because everybody wants to work from home. So there's a lot of vacancy, and they've quadrupled the rates to borrow the money. So the poor landlords are like, we can't pay our bills, so the bank then can't collect, and it's going to have a trickle effect. But the fact that he didn't anticipate it,
It boggles the mind. I mean, most of these smaller banks have so many of the treasuries at a low percentage. So when they go up, they're worth nothing because who is going to buy those from you at a lower
Nobody.
interest rate,
Yeah.
right? So they're basically worth nothing. So you can't offload them. They're not really liquid, and so that's why so many of these banks aren't really highly liquid anymore, and that's what they're trying to crack down on. But at the same time, they do this and force it upon those banks. So that's why you see a lot of the smaller banks getting absorbed into bigger regional banks, and not really nationals for the most part, but bigger regional banks. And at least they're doing that before they go under, but it's still a risk. And so I think that'll normalize when rates go down and we don't have 5% yields on treasuries and all that kind of stuff.
Well, and I just read something about China offloading a bunch of property here in the U.S. too over the last 5 years.
Yeah,
Commercial real estate though,
right.
which if any indication, it's going to be commercial side, right? Like if
yeah.
there's going to be anything that happens.
So on top it off, I mean, commercial banking has always been the darling of banks. That's where they tend to be most profitable, and it's a nice, secure, almost guaranteed rate of return. And now that's starting to go belly up, and that's a big chunk of their profits.
So what are we seeing? So we're talking about Powell here coming out and redacting his statement of optimism that the market was going to have rate decreases, and now signaling that we may not even see those this year.
He's a little bit of a fearmonger, though, in all honesty. I think we still see some more rate cuts coming, but we've already priced in the first, couple into mortgage rates for the most part. I think we'll still see a couple this year. I think rates are still going to go down. Maybe not as aggressive as they thought.
Maybe quarters to
I think
halves.
the market's going to be dictating that a lot, and we'll see how. If the market starts off hot this summer, it's going to kind of force things down a little bit. But we'll see. And on the commercial end, you have things like what happened to Trump in New York that are going to force a lot of the commercial non-investment now, right? I mean, where people that were used to spending $1 billion on a project might not be doing that in those states anymore because they're going to turn around and sue them for that entire amount. So you're going to see a lot of development slow down, I think, on the commercial end, which may be good in terms of getting occupancy into current existing projects.
Right.
But you also see major companies turning around and changing their policy on work from home, right? And doing a mixed or forcing people back into the office. And so we'll see how that dictates things as well.
Well, and I'm seeing a lot of, like, on the commercial side, I'm seeing a lot of these hybrid workspaces, like these collaborative workspaces becoming more and more popular.
Yeah.
While some of these bigger companies offload their commercial real estate and get rid of their leases, get rid of their properties, and they're downsizing to say, hey, if you want to go into an office because you need that face-to-face, here's a Regis, here's a, a success space.
Exactly.
Like,
I can't stand those spaces. Yeah. We looked into a couple of that 7-8 years ago, and just not my cup of tea. And it's like when they zig, I like to zag. So it's like, load me up with some more spaces.
Show me what the trend is. I'm going to do the exact opposite. I'm going to bring back corduroy. I'm going to bring back bell bottoms. That's right.
or you could be like Mike and bring in skinny jeans.
Yeah, there you go. Yeah.
Quit hanging with skinny jeans.
Those are runner's legs. I'm telling you, man.
I told him, I was like, man, I wouldn't even be able to do a full squat in jeans like that.
This guy runs marathons. It's a little neurotic, but it's cool, right?
Yeah.
I mean, I've been to some of the. I haven't participated in it, but I've supported him
He's
from
at the finish line
the
going,
casino. No. When we go to the rock and roll thing in Vegas or whatever, and I'm supporting him from the casino at the craps table. And it's like, oh, we're done. And I'm like, cool, you made it. All right, let's go 7.
What is that?
That sort of thing.
What is that, like a full marathon, half a marathon?
So Vegas only has a half.
Okay.
So they say,
Kinda like
I
San
want to do a
Antonio.
full, but they only have a half, so you feel better about it.
Yeah.
I mean, I ran a 5K one day, and I was done. I was like, man, I haven't ran since I played soccer 15 years ago. Like,
I ran to the refrigerator.
That hurt.
I ran to the restroom.
So we're talking
I'm
about.
not done with Powell yet, though.
Okay.
Yes,
So,
how?
so I mean, if we go back a couple years, the whole board's like, inflation's transitory. We're not going to do anything. So they waited and waited and waited. So that exacerbated the problem, and now they're going to do the same thing on the back end. They're gonna wait and wait before they cut. So I mean, I know there's a lot of armchair financial guys out there like myself. It's easy to say, look, do this, but I just think they have this tendency to wait too long, and they go off of data that's not correct anymore with all the employment figures that are half cooked. There are a lot of part-time people
Right.
pulling 2 jobs.
Well, and like what they're saying right now, we'll see a reflection of today's news in a month or 2.
Yeah.
Right? Like it's historically been super delayed in how the market reacts. So, on that same assertion, it's like, if that is the case, will spring actually be busy or will it be slow? Because based off of this, rates probably will react negatively and go back up a little bit.
Yeah, I mean, I think we're going to have a pretty good summer, spring. I mean, the fact of the matter is, historically, our rates are still in line.
Right.
It's just when you have the differential between someone being in a home at 3.875 back from a 2020 refi and buying their new house at 6.25, whatever. I mean, there's a lot of room to buy down for a very negligible price at this point because
Right.
everything's so compressed. And I think people are just going to realize, look, like, we'll refi if we have an opportunity to later in the year, next year or whatever. But this is what the new normal is.
Right.
Right? And the appreciation of the house is going to outpace the interest rate anyway. So if you're at 3.875 and you're getting at 6, that's 2.125 difference in rate. In our market, like, we're at least 4 to 6% every year on a normal year, not a 2020 year, not a 2021, a normal year. Your appreciation is going to outpace that interest rate every year. On top of it, you're appreciating on the full value of the house as opposed to what your mortgage balance is.
Yeah.
Right? So if you put down 20%, or you got an instant equity in your house and you only put down minimum, or even 100% on a VA, you're going to outpace that. So the good investment is still buying real estate, you know,
Right.
regardless of the interest rate, because you're going to outpace with the appreciation on the house. And
Preach it, brother. Preach it.
Yeah, in addition to your opportunity to refinance at a low cost, and all the other stuff that happens. So is there ever really a good time to just sit around? Not really.
Right.
I mean, last year would have been the time to just maybe sit around and do nothing, but then late in the year it became no, because every month prices are going up now, and we're going to see we're seeing multiple offers again on some properties. And so I think people are realizing that if we're going to live our life on fear, on just waiting for this car to get discounted 5% or whatever, you're probably never going to be able to buy the car that you want, because by the time you actually make a decision, that car is sold, and now you're stuck with a maroon something with beige interior that you never wanted. I wanted black on black. I wanted white. No, sorry, you're stuck with maroon now, right? So I think the fact of the matter is, let's just live our lives properly. It's still a good investment, and let's not wait until things are free, because they're never going to be free again. We will probably never see 3% interest rates ever again in our lifetime.
Right. Well, and even if we do, you're going to have to outbid somebody, because that was just crazy to watch in 2020, 2021 in the San Antonio market. We've never seen anything like that. You did probably up in Washington.
But all the time.
We were getting almost $100,000 over asking price here in San Antonio, which is historically just what? And it's cool.
And then appraised on top of it.
And then it's appraised, but it's cool. It's doable with a 3% interest rate or 2.5% interest rate, but it's not smart.
Yeah.
See, and that's why I've always been a big a believer in it matters who you hire, especially on the buyer's agent side. Because right now, I was texting Mike the other day about this. I'm like, dude, I cannot get it out of some of these agents' heads that don't know this area, because they don't study it enough and they don't know what's going on. They're like, oh, you're overvalued. And I'm like, dude, what are you talking about? These single story homes in this neighborhood sell from $180 to $218 per square foot. Oh, well, the 2-story next door just sold for $315. I said, do I have a 2-story listed? No. Well, there you go. And it's just this constant battle. And that's why I tell everybody it's super important that who you hire should be a specialist in the area that you're interested in, as well as the price point that you're interested in.
Yeah, and that's why you have realtors like you, and you have Mike, who's been doing this since the Stone Age, pretty much.
Jesus helped me along the way. Not that long ago.
He held the steering wheel at least, right? And so, to give you the options and show you what it looks like if the interest rate is this versus this, how much an extra interest are you paying? Right? And so you can refi out of an interest rate when interest rates go down. You cannot refi out over overpaying for a house. Mm-hmm. You are still on the hook for that money, right? So why just sit on the sidelines and wait for the price to go up and up and up, and you're losing equity in the house, because we all know that that's where appreciation is going. These houses, we are not going to have a bubble. I think everyone's waiting. Well, it's about to bubble. We are not going to have a bubble, because we just don't have the things that are going to cause that again.
Well, especially right? So we in our area, at least here in the San Antonio area, we are one of the fastest growing areas in the nation, right? And so there's no bubble with that. Right. And we have always been way behind the California bubble, the Washington bubble, mm-hmm. right? We've been way behind, and we're just now catching up to the national average, and that's basically where we're at right now. There's no bubble. It's the national average, and we're growing.
Well, and I think what most people, and correct me if I'm wrong, y'all are on the lending side, but correct me if I'm wrong, 2008 was due to frugal lending practices, right? Yeah. People who should have never been able to obtain mortgages were getting mortgages and buying houses. And what we're in right now is a lack of affordability, because unfortunately income hasn't kept up with appreciation and inflation, and the cost of living is going up. So my advice to buyers right now, and I'm telling them, is if you can get into a home now, have something to live in, don't be renting, build your equity, let that home appreciate, and use it as a step up property, right? Because here in the future, when you need to expand your walls or you need a bigger footprint because your family grows, it's going to be super important that you actually have that equity versus paying rent, continuing to never save, and not having a dime when the home's now $500,000-$600,000.
Right. And there's a lot of people that are on a certain career path that they enjoy that are never going to be able to go and save $50,000, right? But they might be able to get in a home with DPA, or they've saved enough to get a loan down payment program, and you can easily get $50,000 from the appreciation on your home, right? You're never going to be able to do that through normal income sources, or even if you're a hustler and you're doing stuff on Amazon and shipping, drop shipping stuff, you just won't be able to catch up to what equity can provide for you. And the fact of the matter is, yes, I've been doing this since '97, so I'm going on 27 years now. San Antonio, to your point, we didn't really have a bubble. 2008 was one of our better years of the decade, mainly because of the way that we do business. We're referral only, that kind of stuff. And so we weren't dependent on the 80/20 products, all the other stuff that were really at risk, Lehman Brothers, Aurora, all that kind of stuff. And so we just, our business increased, right? Because we weren't dependent on that. And people looked to us as kind of the stability of the industry then. And also to your point, in 2007, 2008, and for years before, a lot of what got people in trouble were negative amortization loans. So they're done a lot on the West Coast and Vegas, that kind of stuff, where your house was worth 500, but you didn't have to put a down payment that increased interest, that you wouldn't even pay interest. It'd be added to your loan, right? And so next year you own 550, and then you owe 600.
Yeah.
Well, that's because appreciation was 20% a year. So everyone thought, hey, this is the easy way. It's going to continue. It's never going to bubble. And well, it did bubble, right? And so the house is now 400, but you owe 600,000 on it when you bought it for 500, right? And so it was a lot of consumer greed. It was lender greed. It was agency greed allowing these things. Luckily, one of the reasons that I do love Texas, among the very long list, is our Texas Constitution prevented that from happening effectively, right? So, you could not cash out 100% of the home's value. You can't do it currently, right? We have a Texas A6 in our Texas Constitution that allows you to get a maximum of 80% on a cash out, right? And so that protects the equity. It protects the consumer. It protects the state. It protects the lenders, all that kind of stuff. And we're one of the few states that have that kind of protection built into our actual Constitution. Is it fun sometimes? No, because, people are like, wait a second, I can only get this out when, in Washington I was able to do this, or, California. It's like, no, but we're protecting you. I know it doesn't feel like it.
Yeah.
You want the extra money in the
and what
a
lot of people aren't looking at too is Texas just passed the bill that gave primary residents a homestead exemption of $100,000 now.
Yeah.
But that's
massive.
over the next 4 years, right? Like that could go away in the next 4 years, depending on what happens, of course. But say that goes away in the next 4 years, it affects everybody's affordability again, because I know like my property taxes, they went down by like $1,300 a month, or not a month, but a year.
You braggart.
Year. A year.
On my $80 million
You hear that, Mike?
house.
On my
Lake San Antonio. They built it just for me.
They pay me to live there.
Well, math didn't add up.
Well, and one of my personally, and you knew this, but when we lived in Washington, we bought a house. We bought the house when before the market was trending, like in 2019, and then less than 2 years, we made about a $200,000 profit off that house. Now, that's not the same thing here in San Antonio because it's not as fast growing up there. The home prices are a little bit elevated because of the tech sector and everything going on up there. But it just goes to show you that it's going to be one of the best investments that you could actually make, right? Like you're going to, at the end of the day, it's like working, not expecting a check, and then getting a check, right? You go to sell your house, and then all of a sudden it's like, oh, hey, by the way, or maybe a better example would be it's like having a 401k with a company, and you leave the company and they pay out your 401k or whatever, whatever. And you're like, holy cow, I just got $1,500. Like that's, you never knew you were building that. But
what's that statistic, Mike? On average, homeowners are 40 times wealthier than renters.
Oh, I
think it's higher
staggering.
than
that. So last point in this whole thing is last year was a bad year in real estate. 5.4% was a national increase in value. So appreciate 5.4% in a terrible year.
So for listeners out there listening, I know the next topic that we want to talk about is high rates, right? We have high rates just for your traditional resale, but there are some people bragging and some people advertising 4.5, 4.75, 5.75. Where are those rates coming from?
Yeah.
Right. And I think a lot of people probably want to know. I've seen them specifically more with builders, right? Because they have these incentives programs. But Mike, I know you or Drew could probably explain a little bit more on how they're actually able to achieve that lower rate.
Sure. Simple answer, the builders are paying for it. I mean, we can get deeper in the weeds about block forward commitment and how they actually do that, but they're buying chunks of money at a discounted rate by giving the investor money up front. So they have that pool of funds so that they can incentivize people to buy their house.
Right.
Buy my house at 4.5 or the existing one at 6.5. Ooh, 4.5 looks better.
It's priced into the home. Like,
Yeah,
don't get me
you're
wrong.
still paying for
You're
it.
still paying 4, 5, 6 points in some cases. It's priced into the home for sure. It's
Right.
averaged out. They have insurance policies against it. They have hedges against it in case the market shifts or whatever. Those are always temporary too, right? So they run out of these blocks. That's why at some point you're going to see someone just like, we just want to sell the house. It doesn't matter. We just want to sell the house, right? And so those incentives run out. We've already sent interest rates for that. They're down to 3.9 now. They're 4.9.
The mortgage process is complicated, and experience counts. Been doing this for 17 plus years. It's what I know, love, and do. So if you need a mortgage, give me a call, and mortgagewithmike.net.
3.9 now, they're 4.99, 5.99, whatever. You're still paying for it. You're paying through the house, right? And there's positives to buying new builds and there's negatives. That's something that they need to talk to you about.
Right.
If area, and also when you're buying a house, a new build, and the neighborhood is going to be building for the next 5 or 6 years, it's a little harder to sell your house, especially for what you paid for it with these that built-in price versus someone trying to buy a new house and what they're offering for the new person,
Right.
Because you're not going to be able to transfer that with the exception of a few products, right, that you can transfer to that original interest rate over, right? And so there's pros and cons for buying new builds, but then you also see like temporary buy downs, right? And so that's what every lender, well, most lenders can offer. We do them as well. You've got a 1 year, 2 years, sometimes a 3 year buy down where first year interest rate is a couple percent lower than your permanent interest rate. And it helps for just temporary situations. Your payment's going to be lower for the first couple years, effectively, right? We still qualify you based on your permanent one, right? We do not want to put you in a position to fail, right? Where you're expecting the payment is this, and then 4 years from now, the payment is completely different. We want to put you on the right path. However, it does help if, hey, I have a baby this year, I'm going to have expenses. I just want to lower what I'm doing what I'm paying right now. And then in a couple of years, it's going to go to, your permanent rate and that kind of stuff. So we do see that. That's an option for most programs.
Right.
It's pretty simple. It wasn't really popular at all when we were in the 3s and the 4s and that kind of stuff, right?
I got 0.5% for the first year.
Yeah. And so, but there's pros and cons of doing that as well because it's effectively moving costs that the seller was going to pay over to that buy down instead of paying your normal closing costs. So you're still coming out of pocket in a different way than you would if it wasn't, because the seller would just be paying your normal closing costs. But that's something, again, you talk to an experienced loan officer, they're just going to give you all the options. They're going to say, here's a buy down, here's a permanent buy down if you want it, and here's normal, and here's projections on where interest rates are going to go. And then there are some companies like ours that will do a refinance for free as well. All the lender fees.
lender fees.
No lender fees. I want to be very
For
clear.
free.
Yeah. Title still charging.
Yeah, we give it for we like giving good stuff.
Yeah, that they're gonna you buy a house with us
Yeah.
and you're protected and able to do a refi without our lender fees again. We won't double charge them, right? And so there's a lot of options for buying a house now and you being able to do something like a refinance in the short-term future. We should not be afraid of buying a house now because who knows what's going to happen.
Right.
I mean, look at the stock market.
It's
Amen, brother.
It's
The smart people bought in the beginning of 2020 when Tesla was at 260 before all the splits.
Yeah.
Right? And the cruise ships were down to nothing, right? And airfare and airlines were down to nothing. Well,
Yeah.
just look at what it is now. And they waited. The people that didn't make any money waited.
Who would have thought cruise ships would have went back in style?
Yeah. Exactly. Yeah, this guy loves them. Number one. Yeah, well, he absolutely loves it. This is his normal motion every day. He just feels at home.
So this is and it's interesting that you say that. We talk about stocks and you bring it up because one of the things that I was reading in this article was a statement from Grant Cardone, who said that the best thing to invest in right now will be real estate ETFs.
Yeah.
Right. So I went and I found this article from the U.S. News, and I mean, some of these ETFs are trending at like 0.53% on the expense ratio. I mean, they're looking fairly good in what you would want to do. But do you invest in any ETFs, or have you dabbled in that at all? Or
So, I mean, ETFs, yes. REITs, I just go direct.
Yeah. Yeah, he likes his rental properties direct, where he can look at them right in the face.
Look at them.
And so REITs are good.
I don't want to interrupt anybody. Did you call him Cardone?
He did
Grant
call him.
Cardone. I called him Cardone. Sorry, I'm a huge soccer fan. Soccer fan.
It's Cardone.
It's Cardone.
Cardone.
Right.
Go!
Cardone. I don't
trying to
follow
class
the
it
guy.
up.
He's never coached me. I don't need a coach.
Yeah. Yeah, he's trying to classy it up, but Joe Dirte or whatever.
Joe
right?
Dirte.
Yeah, but and
call.
even he said, going back to the
Grant
whole,
Cardone.
yeah, I read something the other day where he said, well, guess who's not going to move any of my ETFs into, or his, what are effectively ETFs into New York now after the whole, the whole thing, right? Is the same thing, and so. But no, I think that's going to be a popular mechanism for people to invest in the overall without specific, like your own homestead or buying a rental property. It's an easy way to get in access to the appreciation of residential and commercial properties is through real estate. I think they're real estate investment fund or
investment trust.
Investment trust.
And so, anyways, but. First, buy your own house, please. Stop renting and then investing in REITs. You might as well just go direct to the source, look your house in the face.
Yeah, give it a hug. Come tax time, give it a big hug.
Right.
It was like when
plant
the whole
some rose bushes.
When the whole crypto came out, everybody was buying digital land, right? It was like, hey, I own your house. I'm like, no, you don't.
Yeah,
It's like
I'm living in my friend's basement. But
hey, but that's interesting that like with the crypto and we're having some people actually do I forget what they're called, but like they're basically turning like the titles in the cryptos and putting them, onto the market, and I'm like, whoa.
Yeah, well, we all saw what happened with those. What were those like images?
The
they
pictures,
were doing?
yeah.
The
non-fungibles.
NTFs,
Yeah,
non-fungible.
Exactly. Where someone bought one for $3 million and it's worth $30,000 if that now. And so. Again,
I don't know. Bitcoin's back over 70 again.
Oh, can we?
Is it over 70?
I heard it was over 70.
It was at 68 yesterday.
No,
I know.
I buy high, sell low. That's
I
my
had
goal.
it at 1,500. And,
Mike's like, I'm gonna go buy some.
I sold it at like maybe 4 or something. This isn't going anywhere, and I'm like, oh, okay. Well, that's
so. Speaking of that too, though, FinCEN is going to require beneficial ownership reporting for transfers of residential real estate. So are you familiar with what the ownership, I guess you probably are, beneficial ownership reporting system? So anything that's owned basically by like an LLC or anything like that that's transferred into an ownership of a primary residence or a residence, they're going to require reporting on that property now.
I mean, big government is here for you, right? So
yeah,
you'll
like
own
they
nothing
didn't
and
want
like
enough
it.
with the $600 Venmo thing they were trying and all the other
So-
IRS, 80,000 IRS agents, and now they want to your tax shelters are now
So it basically says the new rule requires individuals involved in real estate closings and settlements to report and maintain records on specific transactions. I mean, that already happens. Introduces a more streamlined suspicious activity report known as the real estate report to reduce reporting burdens while still providing crucial information to law enforcement and national security agencies.
So I imagine it has something to do with some kind of tax evasion. Someone's coming in with cash, which they don't really allow anymore. You can't come in with $200,000 of cash.
Paper money, yeah.
So-
that's all blue.
So I'm not going to name names here about laundering or anything. I don't
Yeah.
want to go down the political rabbit hole, but this measure aims to hinder illicit actors from laundering money through non-finance transfers of residential properties
There you go.
There
Yeah.
it is.
to specific
So they're trying to
legal
keep-
entities.
Yeah.
So
Yeah.
Bitcoin
Let's not
laundering.
throw some names out there because we could go down a big
Right.
rabbit hole. But
That makes sense.
Yeah.
Yeah.
No. I mean, that's not as.
but it's going to include gifts of interest in real estate.
Yeah.
We-
I would imagine because it's still sheltering of some sort, so you're trying to
Right.
get around the trust process and also estate taxes
death
and all that kind of
tax and
stuff.
all that other
So
stuff, yeah.
that's I think that's less laundering and more trying to make sure that you're paying your fair share of estate taxes and stuff like
Who
that.
wants to pay their fair share?
I mean, I envy.
How many times does Biden say that?
Yeah, right.
Pay your fair share.
Yeah. No, I envy the ability to not get taxed on everything you make.
Right.
Yeah, it must be nice.
Own a
But,
business, everybody.
Yeah.
Buy a house first, then open a business.
There you go. Yeah, we're
In
giving
that
you the
order.
tools here. Obviously, the tools stop
And then-
after
And
buying a
you
house.
Buy your house, then
buy another
open
one.
a business. You
Yeah,
get right off your
as a business owner, I promise it's not as glorious as it sounds.
Yeah.
You still pay
Oh, yeah.
pay your fair share, and 24 employees fair shares.
Not to mention, they make you decide how you want to pay yourself once you own a business, whether you want to be a sole proprietor or you want to be an employee of your own company.
Mm-hmm. Yeah, it gets complicated, but self-employed people are the lifeblood of this country. Small businesses. And so, thank you for your service. Appreciate it.
So,
thank you for your service, sir.
So,
with your
my grunt style shirt.
What is it? What does it say when freedom is
outlawed?
Yeah,
outlaws will be free.
There you go.
So this one is going down John's alley. Here we go. We're gonna start picking on the insurance guy over here.
Yeah, here's the hard.
Yep. Question for
thoughts
for
by
$100. No, it says comp
All peril.
Can I get a photo? We're waiting for the lights to flicker. But no, competition chiefs urged to probe car and home insurance firms as premiums have soared by more than 40%.
Yep, that is not a incorrect stat.
So
over 50% of our book of business has taken over 40% rate increase. And so
That'd be me. I'll own that.
Yeah, I mean, here in Texas, it's super explainable. When you have over 900,000 catastrophic events or 900,000 catastrophic claims, there's a couple of things that the property insurance should have done years ago that they haven't. And I don't really want to get into it right now, but they've tried to Band-Aid like the hemorrhaging here in Texas, and it's going to continue to happen when warm air hits cold air, hailstorms happen, right? And so we get a lot of warm air hitting cold air. There was just a whole bunch of fires up in the Panhandle, biggest fire we've ever had here in Texas. I mean, there's just certain things that are happening here, and it's happening at a quite frequent rate.
Right.
You're going to see increases. And
I went on.
You're also going to see companies pull out because they have.
So I went on Reddit the other day, and one of the top trending topics or searches was what the heck is going on with insurance rates? Mm-hmm. And people were posting like their 2022 to the 2023 increases, and it was like $1,000 difference.
And when you shut down an economy for a quarter or two, right? The ripples throughout the next couple of years. Car parts are at a all-time high. Yeah. And so on the car insurance side, you mess up a supply chain, and next thing you know, oh wow, that bumper that was $1,000 is now $4,000. That window, I mean, they're putting all this cool stuff in these windshields, and they're now several $1,000s for a windshield when it was $200. It's like 3
years ago.
Yeah, you know what I mean? So it just, I mean, everything just, a fender bender that should have been under a deductible amount 3 years ago, 5 years ago, is now a $5,000 accident. Right. And you're just, when that stuff happens, these companies don't make money. And I hate to break it to everybody, but they're not nonprofits. The whole point of the insurance is to make money. And when they don't make money year over year, they're going to raise rate or they're going to leave an area.
What was that SNL skit from back in the day? It was a bunch of bankers saying we've got to change the way we do business. And so when someone comes in with $1 and they want 10 dimes, we're going to give it to them. When someone wants 4 quarters, when they want 100 pennies. And then someone goes, if that's all we're doing, how are we going to make money? And the guy goes, volume. Right? It's the same sort of thing. And what people don't really realize is that insurance companies are some of the biggest like hedge users. They've got nothing but actuaries, which do a longer time frame, saying, hey, if we're doing this, well, we need to make sure our money is invested in this way over the next 10 years. When you have a traumatic event like COVID that just kind of changed everything, obviously they're going to be in trouble on top of the supply chain issues. Luckily lumber's come down, but for a minute there in 21, lumber was crazy, and it doesn't surprise me the government's trying to get involved, but it's because I think they're passing blame a little bit, just like they are when they're saying, well, the price of eggs is crazy right now.
Shrinkflation.
Do you really think the egg companies have doubled their profit? No, it's the cost of everything, getting that to the consumer, that's changed everything. Maybe you should look at the process, because now you have so much regulation in it too. The cost of regulation is what has really increased the price of a lot of this, because you have everyone involved now. And now you're like, well, until you build a new egg farm or chicken farm or whatever you want to call it, right? Who came first, the egg or the chicken? And
The chicken. They just determined that.
I would assume so.
So-
Yeah, the first chicken came first. Then the eggs took over. But the fact of the matter is, we've made everything so convoluted through administration-related policies. You can't do anything without a permit now.
Right.
How do you not realize that increases the cost of everything? If you can't build that, you've got your money sitting for a year because you haven't gotten your permit to let a chicken fart an egg or whatever. Whatever. I don't know what's involved in that industry. I want to be very clear, but that's what I assume happens. How eggs are made.
They definitely fart them.
And so, but that's what all this gets priced in. I'm sorry, but it does. Everyone is taxed this thing to the very end. It's the same thing with insurance because they get taxed on, the claim, effectively through the prices going up for lumber and trades and everything else. And
Whatever happened to no double taxation?
or without representation, because in honesty, honestly, I don't feel like I'm represented. I don't think I have been for at least the last 4, 8, 12 years or whatever it was.
It is funny too. Like I tuned in the State of the Union address. I'm not trying to get political. I just one of the statements caught me at the beginning of it, where 70% of America doesn't want what's coming up.
Yeah,
and you're just like, what? 70% of us don't want, but it's still going to happen.
No, it's still gonna happen.
Yeah, are you
Because
warning
we
us
know
about
best.
something? Because
that is government for you. They say we know best. I don't care if you're you're the professor who's gotten a Nobel Peace Prize or whatever, Nobel laureate for the specific field. We still know better, right? And that's unfortunate because we would like to make our own decisions and mistakes on some level. But it goes back to like Mr. Jerome. It's like, how about you allow us to make our own mistakes? Because all you're doing is making our mistakes for you right now. Right. And we're all armchair kind of pundits saying, I could do better because I mean, that's not the reality of it, but I do want to make my own mistakes. Like, it's called responsibility, right? I want to take my own.
I don't know if I could
responsibility in my hands.
do his job better, but I definitely know that. What was that bank in California that collapsed?
Oh, the crypto one?
No,
the SunTrust.
Yeah, I think it's SunTrust.
I could have run that one better.
Yeah.
Like, hey, let's not put almost all our money in T-bills for 10 years.
I've seen your checkbook, sir. I don't know that statement.
No, like literally, let's go ahead and lock
There's a
in.
lot of red
Let's
locks in your checkbook.
Let's
that doesn't
lock in.
balance. There's no way
I wonder
that
if that's
balances,
why
right?
Blank Check, the movie,
Yeah.
came out.
Well, it's like let's lock in like 1 or 2%, and for 10 years, which is super risky. But yeah, let's do that with the majority of our money.
Yeah, but
And you're just like,
the
why-
thing is,
why-
at the time though, when they're effectively zero, you're like 1 or 2% looks good. I'm the
Yeah.
smartest person on the planet until the
10
stock market goes
for 10
crazy,
years?
and you're like, you would have made 100,000% if you had
1
invested
or
that money.
2% would have been great for a year,
Yeah.
right? You don't.
But 10 years.
You don't.
Yeah, they put it
but
into
10
longer
years,
term,
Yeah, but
they
10
put it
years,
in-
you just like
yeah.
that. You literally you locked in the worst case scenario for a decade.
Right.
Like,
And the thing is
Interest
that
rate risk.
the 10 years are still, even though you're not really locked in, you can sell those off. But when it went
Huge
so far,
loss.
swear it was worth nothing.
Yeah.
So all you got to do is just, you're
Bite the
sitting
bullet.
on your throne of dirt or whatever, right?
You sit on a
or
throne of
something-
lies.
Yeah, right.
I just was like, wow, that one.
Who
that
would have
one
seen
was
it coming? Yeah.
that one wasn't very smart.
So this is interesting for you, John. So on the insurance topic, car insurance claim. So this Reddit user is basically saying, I need some advice on the insurance issue I've been having. In February last year, I received a letter from my insurer stating that there was a claim and to contact them. Keep in mind, this is my old insurance company, not my new insurance company. When I did, I was also informed that someone had claimed I hit their vehicle with mine in November of last year. I told them this was not me as I hadn't been involved in a collision. What do I do?
Oh, that's a good question.
You tell them you haven't been involved in a collision. I mean, if you weren't involved in an accident, you
I'd
weren't
like
involved.
straight talk here, John, if
Yeah.
you don't mind. Exactly what do you do?
Exactly
How's that
what you
working
just
for you?
did. Exactly what he
Just
just
keep
did.
on doing what you're doing.
Well, no, I mean, like, so they're going to want. So the way most of these companies work, and I'm not going to speak for every auto insurance company, but they're going to want a recorded statement from you whenever there's a claim. And if you were not involved in a claim, you weren't involved in a claim. Like, hey, that's fictitious or that's fraudulent. Like,
Right.
I had nothing to do with it. that's your recorded statement. I mean, your legally recorded statement. They have attorneys, and they'll do an investigation. They'll try to get down to the bottom of it. But at the end of the day, if you didn't hit somebody, you didn't hit somebody.
Yeah.
That's about all you need to do.
Yeah, you're gonna get money out of somebody. I need to do.
And if somebody wants to know how to lower their auto insurance rates, you can do like 3 really cool things. Don't get speeding tickets. Don't get in an accident. And don't make any claims. And make sure your credit's decent.
That was 4.
That's
And
four.
what about the 5th one? Use My Insurance Group.
Yeah.
Use my insurance
right.
group.
Huh?
Yeah, I like that.
Hey, the other one is you can go back to school.
Always be closing or selling or whatever.
You could always go back to school.
Yeah,
Get
Rodney
in there.
Dangerfield over here.
So my wife and I,
All right.
we watched that.
It doesn't feel as cool as when he went back.
That
to
was a
school.
pretty cool movie. I saw it the
Yeah.
other day. Back to School.
Yeah.
You know?
Rage.
He
Rage against the
he has
We're going streaking.
Looks like he had way more fun than I did.
Yeah.
like old school. Go old school. Will Ferrell.
Yeah.
Hey, we're going.
Oh, thinking about going to Home Depot this weekend. Maybe Bed Bath and Beyond. I don't know. We'll see what happens.
They were. so we watched this movie last night on Amazon Prime called Rob Stanicki. Robert Stanicki.
Oh, I saw that.
It's got
I saw
John
that yesterday
Cena
too.
and
Yeah, Rickety Stanicki. Ricky
Stanicki.
Stanicki. Yeah.
I feel left out now.
I haven't seen it.
I don't know.
Whatever you do, don't put your hands in the air because they call it. He goes like this. One of the bosses talks like this when he talks. He moves his hand.
It was actually not a bad movie, but I don't know. Unpopular opinion, I kind of like John Cena. I didn't see this whole Oscar
Oh,
thing.
John Cena's awesome.
Yeah, I didn't really
I don't know about
care
the
for what
Oscars.
I assumed happened during the Oscar.
Efron's in it.
Yeah,
it was Zac Efron in it, right?
who's a grown-ass adult now, apparently. Jeez.
Dude,
where did
he
I
got
go?
jacked for that one Iron Claw movie.
Yeah.
He was jacked in that
What
Baywatch
did he
movie,
do
too.
in the Oscars? I feel like I'm out of tune.
I just saw a picture. It was like, I guess he announced or received. No, he didn't receive because there's no way John Cena got an Oscar. No offense to John Cena. I mean, I am a fan. But I don't know. I think he presented, but he was like butt naked with like something in front of him or something. You know, and like, good on you. It's like, I guess if you have the muscles, I don't know.
I mean, he's jacked.
Yeah, he's jacked.
And he's
so I don't know what it was.
And he's like in his like.
Does he have skinny jeans?
Like, I mean,
I don't know that.
He's getting older. I don't know how old he is, but I know he's getting
Yeah.
older. And it's like to be that jacked still. It's like that's
I had
impressive.
no interest in watching the Oscars, and I think Jimmy Kimmel was the host, and I have even less interest in watching.
Who's Jimmy Kimmel?
Yeah, exactly. Apparently, I don't know. He was Adam Carolla's like butler or something, and when they had a show together, I don't know what he was, but I like Adam Carolla a little bit.
I haven't heard him in a long
not
time. He's been
infinitely.
in a long
Yeah,
time.
well,
Jimmy
because he
Kimmel?
just lives his life now
Yeah.
instead of trying to force politics on people.
I think the last movie I saw him was For the Love of the Game. Fell in love with Drew Barrymore.
Yeah. It's been a minute since, buddy. I think he has a podcast. I think he has a podcast. I don't know.
We can invite him
I always
on
like
here so
Adam
he comes
Carolla.
on.
Yeah. Hey, Adam
Yeah,
Carolla,
hey.
come on and join us on Homes and Homies.
Yeah.
Homes and homies.
My last political statement.
Uh-oh.
Can't we do better? We got 2 80-year-old guys duking it out.
Yeah.
Can't we get somebody at least 50?
Yeah, I don't know. It's like that South Park episode where it was like they were doing some kind of town thing, and so I got for mayor or something, and literally it was an option between a giant douche, like a giant douche, like cartoon or whatever,
turd
and a
sandwich.
shit sandwich.
That's what we
Those
got.
were the two options. You know?
Can't we do better?
Yes. I mean, and there's
You-
got to
you-
be a
and
way.
you know what's
when-
funny is that was almost 8 years. That episode aired almost 8 years ago, and it was about these two candidates.
Yeah. Seriously, I mean,
They
there's.
keep dropping nuggets, and we keep just like
Picking them up.
picking them.
I mean, at this point, with everything that's going on, can we not just find a moderate that just doesn't have Twitter? That'd be nice,
Yeah.
right? I mean,
Stop
I-
tweeting.
X
Do your
now.
job.
we got to
or
be
whatever
careful
it's
with
called.
that one though, because they might actually be 90. Not.
I would take a 90-year-old moderate that knew what he was talking about and lived life experience instead of, people that had failed runs, and that kind of stuff. I mean, I don't know. But at this point, I would take a moderate. You can have whatever values you want. There's got to be, we take the good with the bad. And I just don't think there's much of that realization now that no one is perfect. The government is going to fail you. They're going to succeed on some levels. We just need someone that can bridge, and like Biden said when he was running, and he said, like, I'm going to be the most nonpartisan president ever, and full disclosure and everything else. Like, you had the opportunity because you've been in it so long. You do have Republican friends. You can reach against the aisle, but the last 4 years have been about the last person you competed against, as opposed to your own administration.
Right.
So, like, I don't know. I just want someone that wants to fix problems and realize you're allowed to have a heart, but also have a fiscal responsibility to the health and security of our country, right? And I think it's just mostly bleeding heart right now. And that's what's unfortunate is if we don't have the money to support that aspect of what it is to be a country and to bring people in and everything else, you're going to fail everybody. So how about we just find ways to be fiscally responsible, be defensively responsible, support our allies in the right way, and then also be a country that allows immigrants to come over the right way. And
My name's Drew Comire.
Yeah, you text 2222.
Yes, I'm not running for any office.
I'm sold.
Text
Drew for mayor of San Antonio.
2024 coal miner.
Yeah, if you thought Sleepy Joe was a thing, just imagine me like basically 18 hours of the day is Sleepy Drew. I have zero interest.
If you'd like to cast your
Again,
vote for
I'm
Drew,
sold.
text
Drew,
22222.
we were putting you.
Spirit animals of sloth.
It is.
Well, that brings us to our next segment of the show called
That ain't right.
where we on every episode have to try something that just ain't right. And today we went and grabbed ourselves some Bean Boozled. Most of you probably have played this. Some of you probably have not. But like we were mentioning earlier, Drew almost went hand first into the.
Oh, I love jelly beans.
To the jelly
They're
bean.
my weakness here, and then I realized that some of them are just not right.
And it comes with it comes with the spinner here, but I think we've kind of mixed them up. So we actually have Bean Boozled, but we also have jelly beans mixed with what was the boba tea jelly beans.
Oh.
So
Oh,
you're
I think
either
that's the one I ate earlier.
Yeah,
Was
they're
it
not-
the
they're not-
boba tea?
Yeah, they're not good.
So-
but they're
yeah,
They're not horrible.
so you're either gonna grab a boba tea jelly bean,
Bleen.
or you're gonna grab a Bean Boozled bean.
I'm going to get a
I'm gonna
bad
go
one.
get another drink first in case I get spoiled milk or something else where I'm just, I need some.
The home buying process could be challenging, and that's why it's super important that you actually have a real estate expert who knows the area and price point of what you're trying to buy at. That's why I've been a real estate agent for several years, helping buyers like yourself achieve real estate success. If you're looking to start the home buying or home selling process this year in San Antonio, reach out to me, 210-771-2404, or reach out to and start your home search or get your home value at ErnestEnriquez.com.
Yeah.
If you'd like to grab this mug that we have here, Homes and Homies, support the podcast, help fund the podcast, maybe we'll put up a website or something.
Bam. Homes and Homies merch.
Homesandhomies.com. So, Drew, as being part of our special guest, we'll let you go first.
Oh, geez.
Last week, if you tuned in, if you haven't tuned in, go back and watch the last episode. We did some ghost pepper, scorpion pepper, and
Wait, are we spilling the
Carolina Reaper.
spinning the wheel of justice? Or
no,
are we
we're not
just-
going to spin
just
the wheel
get-
of justice.
just
Let's
eat till you
just
get a bad
see,
one. Just go.
Eat till you get a bad one.
Get a bad one.
That was probably a bulba one.
That was a bubble one. I can tell.
You can generally tell they're the. Grab one of those colored ones, like one of those right
Speckled ones.
there. Here, like I'll grab this one
You
right
got like
here.
a 50-50 shot on it.
Oh, jeez.
No, immediately if it's a stink bug.
What is this one?
Marshmallow.
Oh,
Oh, I lucked out.
Yeah.
that one is either dirty. Oh wait, that's either
Dirty
stinky.
diaper?
No, stinky socks
Or cotton candy.
or tutti frutti.
Come on, dirty diaper. Oh, wet socks. Oh, man.
Oh, no.
Who's the one with the eyedropper? Like that's basically like, oh, this does
Is it
taste
good?
exactly like it.
But I'm going to power through it.
Here, you need some chips to cleanse the palate.
I got my Homes and Homie cup.
The Homes and
Like, are we doing a certain amount? Because I don't want to just run through my.
You got to
You gotta go till you get a
and
bad
see a
one.
bad one.
What is this one?
What is it? A rock?
It's like really dark with white specks.
Dirty dishwasher or birthday cake? No, wait.
Dirty dishwasher.
Actually, that's cappuccino or liver and
No. What's the red one?
Old Bandage.
No.
Or pomegranate.
Okay, the orange. I'm gonna go with the dirty sock, I
I'm the
guess.
only one who grabbed something bad. Everybody else
This-
was getting good stuff.
Yeah, that one really wasn't bad.
I'm going to the brown ones. It's got to be safe. This one's probably boba tea.
Yeah, it's boba.
Yeah, that was bad. It was a red one with.
I think that was a
sauce all
dirty
over
sock,
it.
but I can't tell.
With salt. Yeah, if it was Old Bandage, probably.
Yeah, it's disgusting. It's absolutely disgusting.
Is there a brown one in there?
Yeah.
I think that was
What
an old
is that?
sock.
It's not good.
Yeah. Okay. Well, I'm
Oh,
done.
so you just got liver and onion.
Oh,
I
that's
just got-
horrible.
Yeah, that
That's
old
not boba
bandage,
tea.
That old bandage was really, really bad. I don't know
Uh-oh.
why anybody would.
What did Drew get? Drew got something.
He's guzzling.
It was the sock.
That old bandage was awful.
So
Who would have thought?
oh, that's dead fish.
Don't y'all normally like have something like who's got the best tacos? How did I end up on Old Bandage and Barf
I know.
jelly beans instead of like who's got the best carne asada tacos in town?
Oh man, that's terrible. Oh, hey, try dead fish.
No,
What color's that fish?
It is
I already
orange
tried
and
Old
red.
Orange and red.
I already tried old bandage.
Is this orange? Is this dead fish?
It's 50-50 shot.
Yep, that's probably dead fish. It's either dead fish or strawberry banana smoothie.
Right.
Oh,
Strawberry banana has to be. No?
It's
Okay,
dead
it's dead
fish.
fish.
I'm just swallowing, not chewing. Oh, that's horrible. Ugh. That was worse than the liver.
Is that like that rotten steak from like Norway or whatever, or the
I don't know.
shark?
I've had
the
that.
shark.
it has my eyes
Gefilte
watering
fish.
though.
No, not the gefilte fish.
No, that's
That's
our
Jewish.
people's stuff. Yeah.
All right,
Lutefish.
I gotta try one of the
Lutefish.
bull ball ones though.
Oh, I had that. That was horrible. It's like jellied fish.
That couldn't have been a boba.
Oh
So,
no,
so
no,
something
that
was
wasn't
really
a boba.
gross.
Try one of those.
that was,
One of the purple ones that have
that
no
was
spots.
Old Bandage.
Yeah. The
So,
purple one with no
every
spots.
Every Christmas and every
Oh.
New Year, my grandma would always have pickled herring out in like the spread. That was the grossest thing I've ever eaten in my life. But it was like clockwork because I guess she grew up on pickled herring.
What nationality was she?
So she was Irish.
Oh, she,
yeah.
she from Chicago?
Yeah, she was.
Yeah, my grandma did that too.
Yeah, yeah.
I would love to eat that.
Man, that pickled herring was gnarly.
Yeah,
Like,
but it's kind of like what you grow up on.
Yeah, I guess.
Becomes a thing,
yeah.
right? Like,
Because she'd pull it out every Christmas too.
Yeah.
It's
It's kinda
Christmas.
like,
No,
Here, Drew, try this one.
No. No, that was really bad.
what is
No.
it? It's that
It's
one.
buttered popcorn.
He doesn't
Or
like,
rotten egg.
Or,
Yeah.
or
No, I'm
milk.
good. I already got one. All right.
I got two.
I got
committed.
three. I'm
You got
over three. I picked three bad ones.
Oh, you're more of a man than me. If that's what the jelly bean challenge is supposed to.
So I'll do one more. That'll.
Just hopefully it's not barf.
Get the dead fish.
Barf is in there.
What's this one?
Oh, I don't want baby
What is that
diaper
one?
either.
White with brown speck.
It's either stink bug or marshmallow.
It's delicious.
He already had a stink bug, so if he gets another one,
2 for 2? No,
no,
that has to be marshmallow.
That's good.
Okay.
All right, so this one was.
That might be dead fish.
that's either barf or peach.
Oh, barf. That's going to be magnificent.
My name's Ralph. This is definitely barf.
Took a minute.
Oh no, that one was too bad to even try to get down my mouth.
That's why I swallowed the fish one. I just
No, that was. Oh, that ain't right. That ain't right. Who would make a bar? Like who would do that to some
what's that look like?
fucking grog?
Yeah, I'm going in.
John Henry Hansen is going to have his own shirt.
It's an orange and red.
Orange and red.
John's
I say
like,
grab a
"Rap."
handful, bro.
this
Grab
it?
like 5 or 6 and have it all mixed together.
That's probably barf.
Or it could be peach.
Oh, there's another one right there. Too.
I've not gotten lucky yet, so it's probably barf.
Good thing we got the chips. We were smart. We got the
I still got some
chips.
chaser.
What is that, a palate cleanser over there?
That's barf.
How are you able to
Finish
eat
it.
that?
Yeah, look
How
at
are you able to eat that?
Wow, he shot the other one down his windpipe. That one, he's savoring the flavor on that
He's
one.
like, tastes like chicken.
Believe it or not, the fish was worse than that.
The fish was
I believe it.
The
gross.
fish
believe
was
it.
the
The fish was
absolute.
bad.
Because the fish starts the barf.
Here,
You know, in real life.
you want a fish, Drew? Here you go.
No, I'm good.
I
Do it.
could do the
Do
barf. I
it.
couldn't do the fish.
Dude, that
Nope.
barf was gnarly. I couldn't do the barf.
Oh. Well, I think on that note, guys, we wrap it up.
We wrap up. Yeah, I need another chip.
Well, thanks for tuning in to the Homes and Homies podcast for all your real estate, insurance, mortgage needs. Be sure to listen in. We got all the information coming right at you. My name's Ernest.
My name's Mike.
Drew? Question mark? I'm Drew.
And John.
Hey, quick shout out to. No more shout outs. It's over.
Okay.
No, it's not over yet. We'll close
What's
it
your
out.
shout out?
I just want to shout out to Ross, the guy who's helping me in Logansport, Louisiana. Good guy.
Thank you, Ross, for your
All
contribution.
right, Ross, you're the man, apparently.
Ross.